This is wild, and you'll want to hear this. The Federal Reserve just made a big call, keeping interest rates steady despite major pressure from the Trump administration to cut them. This decision matters because it affects how much it costs to borrow money, for everything from car loans to mortgages. The economy is growing slower, but inflation's still a bit high, so the Fed's playing it cautious. Two Fed officials, both Trump picks, actually disagreed with this move, which hasn't happened in over 30 years. That's a big deal and shows how tense things are. Why the tension? Trump's pushing hard for lower rates to boost the economy, saying inflation's not a problem. But his tariffs are driving up prices, making it tough for the Fed to lower rates without risking more inflation. After the decision, markets tanked, and the odds of a rate cut in September dropped below 50%. Data shows inflation hit 3% this year, higher than expected, and that's got experts like Harvard's Jason Furman sounding alarms. The Federal Reserve's decision to keep interest rates unchanged is creating a tough reality for everyday Americans, and Delta Airlines' recent earnings highlight this struggle. Delta reported strong profits, beating expectations, largely because sales of premium economy and first-class tickets are soaring. Wealthier travelers, riding the wave of a booming stock market, are splurging on these pricier seats. Meanwhile, basic economy ticket sales are barely growing, showing that average consumers are falling behind, squeezed by rising costs for essentials like food, gas, and rent. Inflation, made worse by Trump's tariffs, is hitting regular people hardest, making it tougher to afford even budget travel. Delta's earnings reflect a growing divide. The rich, lifted by market gains, keep spending, propping up what feels like a disconnected economy. But for most, the higher prices and stagnant wages mean cutting back on things like vacations. As companies like Delta plan to add more premium seats, it's clear they're betting on the wealthy, leaving everyday consumers with fewer options and a heavier burden in this uneven economy. That 3% inflation rate means the cost of living is climbing faster than expected, outpacing last year's 2.8%. For young people, this could mean stretching budgets thinner for essentials like rent, food, or transportation. The Fed's worried that cutting rates now could make prices spiral even more, especially with tariffs adding fuel to the fire. Keeping rates at 4.5% is their way of trying to keep inflation in check, but it's a balancing act with no easy answers.